Hey, this is Roland from PMI Realty Group, where we manage properties from an asset management perspective. And today, what we want to talk to you about is a very important topic. And I know most times I say we're talking about a very important topic, but in order to really realize, or for you to bring to fruition your real estate goals, you have to have a plan in place, right? And so what we want to talk about is how to achieve your investment portfolio success without overspending. In the real estate business, it's really easy to overspend. You have situations where you are looking at a portfolio, an investor is selling it for a price that you think is fair. You don't really look at the numbers, and you can end up overpaying for a property really easy, especially in a market like it is today, where the market is really hot. Overpaying for properties is not something that's hard to do. So what you really want to do, though, when you are, after you purchase a property or when you have your portfolio, we need to look at three key things. And I'm going to talk to you about those three things now. And so the three things that you really want to look at and pay attention to is reducing your portfolio expense, improving your portfolio's value, and buying additional properties to grow your portfolio. And that's really going to help you with getting success in your portfolio. And we're going to talk about ways you can do that without overspending. So let's talk about the first one, reducing your portfolio expenses. One of the ways you can reduce your portfolio expenses is look at your hard costs, look at your taxes, your mortgage, and your insurance to see when you can reduce that. Sometimes we have a set and forget it mentality, and we just get the insurance, we leave it, and it goes up or what have you. We don't really pay attention to it until we have a claim. But every year you should be looking at your insurance, getting it quoted out. Insurance companies will do that for free. You should have companies that you work with to look at your property taxes to see if that can be reduced. And of course, you should have a trusted mortgage broker. You should have a relationship with your banker where you can talk about mortgage rates and seeing if there's any opportunity to reduce that as well. One strategy that I really like is having a longer amortization schedule, because if it's a rental property, it is being paid off by your tenant. What do you care how long it takes to pay off the property? Chances are you're going to sell it before 30 years anyway, after you've gotten the full value out of it. It just depends on at which point you sell it to get that return on investment. But another thing you can do is negotiate better rates with your maintenance and operational vendors. If you're working with a vendor and you're providing them a lot of work, talk about getting a discount, 10, 20%, what have you. I just had a discussion with a vendor I was coming on board with the other day, and he said, he wanted to give me, a 20% discount for the month. I said, hey, why don't you give me a 10% discount over the course of the whole year? And he agreed to that, right? And so I got 10% discount for a much longer period of time. And hopefully that will continue beyond that period, but that saved quite a bit of money. Explore potential refinance and saving cash infusion. We talked about that a little bit. Increase rent where applicable. You should always, every year, look at opportunities to increase rent during the lease renewal. Invest in investment software to streamline your process. The less time it takes you to do something, the more money you make. And so finding ways to streamline your processes is always a good thing. Stop advertising campaigns that are not working. I have a couple of advertising campaigns that I had to stop that just weren't producing any results. And one of those advertising campaigns that wasn't producing any results was SEO. I'd get people clicking on my ads all day, but I wasn't getting any money from it, or I wasn't getting any leads at all. And I spent, at least 6 to 8 months on that, and they said, hey, you have to put a bigger budget for you to end up getting a return. And it just wasn't working for me. So I just stopped it. Keep up with regular maintenance efforts. Yeah, if you fix an issue and it's $1 issue, before it gets a $100 issue, you're better off for it. And tighten up on pre-screening so you can reduce placing bad tenants. Placing bad tenants can cost you in time, effort, eviction costs. Of course, there are programs that can help with that, but the best way to keep a bad tenant out of your property is to not let them in, and you should take that advice moving forward. And so, in terms of reducing your portfolio expenses, those are the opportunities and options you should look at. Now let's talk about improving your portfolio's value, right? You know, you can't really do anything about the location of a property, right? Unless it's a mobile home, um, you can't really move the property from one place to another, right? So location is important to the value of your assets. But considering where the home is, you know, you can make in-home upgrades, you know, that meets the standards of what the community currently is has and where the community is, and you know, get extra value out of that property. Smart home upgrades are always a good move. People are into smart locks and smart thermostats, and so those are always good options. Renovate small spaces. You know, some homes have old layouts, and you may want to change them to newer layouts that are more attractive to renters. Find additional revenue channels, right? Maybe there is an opportunity for storage or cleaning service discount or resident benefits packages. That's definitely a way to increase value and return your portfolio, return on your investment. Improve curb appeal. You know, the way your house looks in the house definitely increases its value, and add new amenities where appropriate as well. So those are all the areas that I think would be good for improving your portfolio's value. Next, let's talk about building additional properties, buying additional properties to grow your portfolio. And sometimes building those properties are better than buying them because you can control the cost better sometimes when you build them as opposed to when you're buying them. You know, you should diversify your portfolio, including property type and location. And what I would say is, you know, buy properties next to key infrastructure, right? Key anchors, right? Like a university, or a big hospital, or a new mall. Those are things that don't move or don't lose value quickly, and definitely will help with your valuation. Make clear distinction between potential assets for flipping and renting before you buy. Understanding, you know, what you're going to do with the property definitely helps you when you want to make an offer, right? You know, knowing your exit strategy and what you want to do with the property should be top of mind, and it definitely will help you when you want to sell, right? And so that definitely helps with your portfolio value. Invite others to invest with you. You know, syndication is a great way to do that. Identify those with existing tenants whom you assume rental management. You know, it's best to sometimes outsource their property management. Robert Kiyosaki says, you know, property management is the hardest part of real estate investing, and to some degree, that's correct, right? So understanding what you have to do after you purchase a property, whether you have to, you know, manage the rental or get the property fixed up for selling is definitely something you want to keep in mind and in consideration. So those are all the things that you need to think about when buying additional properties to grow your portfolio. And I think all together, you put all those together, those are how you achieve investment portfolio success without overspending. If you want professional guidance for growing a successful portfolio, consider these 3 areas of improvements. And always you can reach out to us, PMI JCM Realty Group, where we manage properties from an asset management perspective. And we're ready to help you and talk to you about how to grow your portfolio in a strategic way and really get the full benefits of your portfolio. We also explore the latest investment trends within the Tampa area, and we have a webinar, How to Streamline Your Rental Property Portfolio for Maximum Growth, that we have every month. You should definitely join us on this call because we're going to talk to you about not only this, but how to guarantee rent, dynamic rents as well. I mean, that's something that's very new in the industry, and that's something that would definitely help increase the value of your property or the value of your portfolio as well. So join us on our webinar. We definitely would welcome to have you and to have that open conversation about those things. You can also join our Facebook group. Within our Facebook group, we have seasoned investors that are going through the same things that you've gone through, and they'll be there to answer your questions. And the link is over here in the in our article. And as always, if you want dedicated advice or advice specific to your portfolio, give us a call. You can reach me at 813-333-9617. You can you can also contact me at rcharles@pmijcmrealty.com. And as always, you can go to my website at pmijcmrealty.com. Thank you and have a great day.